Hi everyone, I'm Jamesy from Starting Out channel. Are you looking to invest in robo-advisor and you're choosing between Syfe or Stashaway? Worry not, I'm here to share my experiences with both platforms together with actual data of my investments. Please note, I'm not a financial advisor, so my video is just for your information. First, we're going to look at Syfe. The good point about Syfe is you can start investing with only $100 into any of their 6 different portfolios, which contains mostly ETFs, bonds, and commodities. If you want for an in-depth video on steps to invest with Syfe, you can watch my video over here. Now, I'm a Singaporean. I have 3 very commonly found traits. I'm greedy, I'm kiasu, and I'm kiasi at the same time. So I went for 3 different unique portfolios. The greedy Jamesy went for equity 100, where 100% went into ETFs. This means my ride in the stock market will be like USS Battlestar Galactic roller coaster ride, where you fly up, down, left, right during the whole journey. While the roller coaster is going up, I'll feel very shook. But when it crashes and goes down, I'm gonna scream my lungs out. So you will feel this way if you can't bear seeing paper losses. Lucky for me, I'm totally fine with it. But for you guys, worry not. Their portfolio are well diversified, even for 100% equities. Let me show you my peaceful ride in Syfe. I invested a total of $5,400 and got a return of $170.18, about 3.55%. It's not bad for 100% equities portfolio. Next, I'm going to intro you to Kiasi Jamesy, who decided to go with Syfe Core Growth portfolio. This portfolio consists of 69% equities, 25% bonds, and the rest in gold and cash. I would say this is more of Puss in Boots theme park ride if you took the ride before. Not so jialat, but there's still surprise mechanics for you. I invested $2,000 and got a return of $70.97. This is about 3.87%. Apparently the return percentage is higher than equities 100 portfolio. So lesson of the minute, higher risk doesn't mean higher returns. The last portfolio belongs to Kiasu Jamesy. I felt a bit FOMO. I don't want to miss out Singapore real estate investments. So of course I go all in, right? Correct. So this 100% REITs mainly gave me passive income biannually or annually, but so far I haven't received any cent yet. If you decide to invest in REITs, you can say this to on your Instagram and Facebook that you own top 20 Singapore properties. Just don't mention how much you own. As you can see, the ride here is like an MRT train, usually peaceful until another Karen appears or breakdown. I look forward to it going up because people can start dining in again. So guys, please get vaccinated and dine in our local F&B. You not only get to hang out with your friends, you're also helping to push your REIT investment as well. My $13,000 investment in this train ride gave me a return of $225. That's about 1.71%. Here's my Syfe report card. If I were to compare buying percentage gained with individual stock like Apple and Tesla, it's definitely a lot lower. Stock itself holds a lot more risk but have more potential growth than an ETF. But for Syfe, it's definitely a safer way to invest if you don't trade often on trading platforms. Just put your money inside and drop me a comment, we can go KTV together. Just make sure there's a satay or chi chong fan owner around, just in case. You can also access Syfe platform on browser and smartphone app to see if you became richer or poorer. It's easy to start an account, just deposit and withdraw money anytime that you want. For myself, I'm investing long term, so I look forward to them beating the market yearly. Guys, now we'll move on to Stashaway. For an in-depth video on how Stashaway works for you, you can watch my previous video here to see how they stash your money away. So at Stashaway, there's only greedy Jamesy because I just want to try the platform out. everybody loves choices, like you having the choice of subscribing to my latest starting up channel right now, or you simply watch and 拍拍屁股走人. That's pretty sad. Support local, guys. Right, back to our topic. I would say that Stashaway wants you to dream big into the future because they want you to set your goal before investing. Now imagine you're planning for a wedding banquet, inviting all the people you've never seen in years, or buying a car to pick your beautiful girlfriend up to enjoy the daily CBD area jam. It makes you start dreaming that your investments will make you into a millionaire. But after setting my goal of becoming the next Warren Buffett and keying relevant data, I went for 80% equities and 20% bonds and cash. Damn, I'm in for a roller coaster ride. I invested $4,200 and got a loss of $110. That's when I asked myself, why am I losing money? Suddenly, Sherlock Holmes came into me and I realized they have about 30% equities in China stocks. And right now, if you read news, Papa Ping is punishing a lot of Chinese tech companies, so their stock value kind of plummeted. That pretty much explains my losses. Syfe also invested in China ETFs, but only at a 15% weightage, so it's not that badly affected. The lesson of the day: know what your robo-advisors are investing in. That being said, I'm anticipating China stocks to rise sharply after the whole saga is over. Companies like Alibaba and Tencent are the promising ones. Didi is probably out of the game because they defy Papa Ping, which kinda suit their fate, in my opinion. Here's my Stashaway report card. It's easy to start investing with only $100, so you can access their portal easily with your PC and your smartphone. User interface is easy to use as well, but what matters is the returns because money talks. Despite them in the red now, the core beliefs of every retail investor is to know that stocks will go up and down. You will only gain or lose money if you sell it. Patience is the key, guys. It's just like you chasing your girlfriend, it takes time. Also, I think China tech stocks will rebound, so just gonna leave my investments inside because the first rule of investing is not to lose money. Now guys, we come to the main golden question. Syfe or Stashaway? Now, Syfe focuses more on US stocks while Stashaway did place a little bit more weightage on emerging markets such as China. Personally, I think both has their strong points and their weak points. We cannot predict the future. For now, I will just hold for 1 year, 2 years, or maybe 5 years. We'll see how it goes. Because I only invested for the past 2 months, so technically these results don't really prove anything. Guys, share with me below on which robo-advisor you guys prefer, and should I continue investing with Stashaway? Don't forget to subscribe and like the video because a charity a day keeps the market crash away. Watch my other videos on how much I made from all the robo-advisors I invested, because you guys love more options. Faced it. That's all I got for you today, my fellow friends. Jamesy signing off.